Bonds and stocks. Stocks and bonds. In 5 minutes, I will explain the backbones of the global economy and why it matters to you in every investment decision you're ever going to make. The first part of the video is an overview to see if you like what you're learning and how I'm explaining it. Continue, and you can learn more on the subject. On screen, we'll have the subject and topic. Plus, I use bullet points to reinforce certain items. And at the end will be a summary that looks like this. By structuring this way, I hope viewers like you can absorb the knowledge at your own pace and easily revisit later for reference. I'm Ian Goldie, and for 25 years, I have been a professional financial advisor and portfolio manager. So, I'm very honored to help our viewers better understand investing so you can turn your dreams into goals. This is Finance in 5, and today you're learning about stocks and bonds. So let's start the clock and dive into stocks and bonds and why this knowledge is so critical to you becoming the best investor possible. Here is the secret in 6 words, and with these 6 words, you'll instantly understand the foundation of all investing. Here it comes. Stocks you own, bonds you loan. Stocks you own, bonds you loan. Just remember this rhyme and you're already 90% towards understanding your investment decisions. Own. Think of being a business owner with partners. When you have stock, you have equity in the business. Now, bonds, you loan that business money so they can operate and grow. That's it. Stocks and bonds explained in 20 seconds. We have another few minutes. Let's spend our remaining time getting into more details of the loan and own scenarios, starting with loans, because the earliest forms of capitalism were based on debt. When you borrow money, you have debt, and the person loaning is called the debt issuer. Critical. This is critical because the entire relationship is based on the creditworthiness of both parties. The basic premise goes like this. The borrower needs a certain amount of money to cover some type of cost or investment, and the lender wants to know how long you need the money for and what purpose. Now let me explain why knowing the purpose of the loan will affect how much interest rate will be charged. And this basic premise has been maintained for thousands of years. Insert camel picture here. First, put yourself in the position of the lender, not the borrower. Now, many of you probably borrowed money at some point in your life, but how many watching have been a lender? So I want to focus on the lender's thought process because I think this knowledge will help you to become the best investor possible. Now, the benefits to being a good borrower include lower fees, more favorable terms. The lender doesn't want to lose their money. So their primary question is, will you pay them back what they lent you? The closer that answer is to positively yes, then the borrower will receive a lower rate and better terms. And if the answer is maybe or possibly, well, gets higher rate. And if the answer is I don't know, then you might not qualify for any loan at any terms. Now, the next thing the lender wants to know is the intention for your loan and how long before you could pay them back their principal and interest. Principal and interest. I cover principal and interest in my video for returns. Now, why do the lenders need this info? What and when? It's not a personal invasion, but a banking necessity to determine risk assessment. How long you need the money. Every bond has debt has a component called maturity schedule. How often you will make payments is called frequency. The longer time needed to pay back the debt, the more the risk lender is taking. Because we all know the world and people's lives can quickly change, especially if you're loaning money for a long term, like 30 years. Now, Walt Disney once issued a 100-year maturity bond, and I cover this and more examples in our extended version of this video with bonds. Now, a car payment is typically spread over 5 or 6 years, and mortgage payments are often divided over 30 years. And once the lender knows the who, the how much, what for, and when will I get back my money, they can then determine your risk score and give you an interest rate in terms, because the lender's next thought is making a profit on that loan. So bonds are all about debt. How do stocks figure into the economic equation? Stocks are a fraction of the size of the global bond market, but they still serve as a vehicle for capitalism in any country that allows ownership rights. Back to the history example of financiers backing early explorers. It was because of the risk takers that the very first stock market was created in 1602 in the city of Amsterdam. You see, these investors were not interested in high risk with just small rewards. No, as long as the ship arrived safely back home and the borrower paid back their debt with interest, no, that wasn't for them. For this much risk, investors, they wanted to participate in the big upside of a successful voyage. But to spread that risk around, the investors pooled all their money into one investment structure and they received shares of this venture, depending on what percentage they invested. Thus, the very first shareholders were created. The basic premise of capitalism is that you're rewarded for taking risk and providing a needed service. Stocks and bonds are extensions of that capitalistic concept. In 5 minutes, you now understand the very best basics of stocks and bonds. And if you want to stick around and learn more, I'm going to be sharing how to buy a stock or bond and what to look for so you become a successful investor. I also give examples of both and how this knowledge can help you in all your financial decisions. There's some real pro tips ahead for those on the path to becoming the best investor possible. So stay tuned and stick around. But first, invest in yourself by helping us make more videos. Just hit the like and subscribe button. Pushing a button is one of the easiest things you could do for self-improvement. In the comment section, please tell us what you like or how we can improve. Probably that clap will probably get the comment section going. Sorry. Share our videos. Share our videos with people you want to see more financially successful. I'm Ian Goldie, and this has been Finance in 5, Intro to Stocks and Bonds. It's been my honor to serve. I'll talk to you soon.